Hi everyone, today let's take a look at Michigan consumer sentiment. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Michigan consumer sentiment index dropped down to a 67.4 from a 77.2. The consensus was a 76, and this is a substantial move lower. Are we starting to see the first cracks in consumer sentiment? So far, the consumer has been quite resilient, and now we're seeing pretty significant steps down for May. And they also mention here the one-year outlook for inflation jumped up to 3.5, up 0.3 percentage points from a month ago. So inflation fears are on the rise and consumer sentiment is on the decline, and this is definitely concerning. Looking at fear and greed, this jumped up to a 48 from a 44, so pretty substantial move higher. You can see that continuing to trend higher here on this indicator. Still in greed here for momentum. Strength still hasn't changed. Fear here for breadth. Really, the major indicators have not moved much at all. We did see safe haven demand step back into neutral from fear, and junk bond demand still in regular greed. Overall, still mixed on the indicators while markets continue to step higher. Moving over to seasonality, we did not get the dip here on the 10th that we expected. We'll see if that comes in next week, but right now this chart has not been super useful. Moving over to the economic calendar, we talked about the inflation data way higher than expectations. 3.2 was the previous and the forecast. You can see even the 5-year stepped up to 3.1, and then consumer sentiment well below expectations on both of these. Not great, and we'll see how this plays out over the next couple of weeks. Moving over to max pain, you can see we finished around 520. Total options finished up over 1 million. We talked about it yesterday. 519, 520 was the top of the puts. We didn't expect to go too much higher, and sure enough, we didn't. And we'll take a look at next week's max pain on the weekend video. Moving over to the charts, looking at the S&Ps, you can see we tried to go higher in the pre-market, and then we broke down and went sideways during the day. So we'll see how that plays. It is down a little bit more after hours. That could just be end of the week selling, people who don't want to hold positions over the weekend for various reasons. But right now, structurally still okay. And then looking at that daily chart again, you can see the gap higher, held most of those gains, 0.13 to the upside, but we did close below the level 520.88. Wanted to see that level hold. You can also see we got back below that trend line here, tried to hold above it, pushed below it, retested, selling a little bit. So doesn't look super strong, but the daily chart trend is still intact. Moving over to the Tasty charts here on the 4-hour, you can see we talked about this yesterday, but that upper ATR is sitting at 522.38. Going into the day, it was at that 521 area, and you can see we wicked that on that first candle of the day and then sold off, sideways choppy action. We're still above all the EMAs and SMAs, so still bullish conditions, but this is why it's important to watch those ATRs. That was clear resistance here today, and we might see a little bit more pullback in time and then a further rally. Moving over to the Qs, you can see very similar thesis. Wicked that next level, 433.91, pulled back, held the 55 EMA. You can see again, we tried to hold that level and then we couldn't after hours. On the market close though, we did close above that 441.81 level. You can see it here on the daily. Everything's good there. Momentum still fine on the daily chart. Once this rolls over, that's going to be a pretty weak indicator. We'll see how it plays. But right now, seems like things are still intact. Go ahead and extend out that trend line right there. So we're still within this range. Everything still looks good, even if we saw a little bit of weakness on the mid-session. Moving over to the Tasty chart, similar thesis. We threw a wick to that second ATR, finished right in the middle of the range. This does look a little bit weaker. This is the 4-hour chart. We're still above all the EMAs and SMAs. Support still down here at 437.70. Still think it can hold this trend. I still think we could see maybe 1 or 2 more pushes, but that was a pretty decent rejection from that 444 level. Moving over to the Russell and the Dow, the Russell was down 0.75, so it rejected off that 206.50 level. It did touch it like we thought it was going to, so it hit the level and then rejected, closed below 204.66, 62, and that is concerning. You can see we're all the way down here at 204.09. Not great. Momentum rolling to bearish here. I think this might be the top, or Monday might be the top. We could see a slight retracement. Right here, this is definitely starting to look weak. We've already seen this once where we had a big wick rejection, pull back. Could argue maybe this is a bit of a double top here on the Russell. So keeping a close eye on that one, and then looking at the Dow, gapped higher, dojied. So it looks like a bit of a shooting star, 0.3 to the upside. Momentum and RSI are still bullish. So everything still does look good, and we've seen candles like this before. And again, sometimes we just see end of the week selling, so people aren't holding positions, but that is a little bit concerning based on how extended we are. Moving over to Apple and Tesla, Apple was down 0.82. You can see we got a step towards bearish momentum, not great. Still holding that 182.37 level, so nothing says this has to break down yet. And it is a bullish structure above all the EMAs and SMAs, so everything on Apple still looks okay there. And then looking at Tesla, this continues to sell off. We knew it was going to once it broke this trend line here. Tested it, tried to go higher again, broke down, broke the level. Everything continues to sell. But we're at a critical level now, 167.34. If this level does not hold, this is probably headed significantly lower. My next support would be down around the 156.80 area. Momentum continues to roll to bearish, and I do think this is probably going to sell. Does not look great at all. Moving over to staples and discretionary. Staples finally hit the level, 77.50. We've been watching that one for a while. Finally hit it, overthrew it. We'll see how it goes from here. Still have just a couple of wicks here before we hold that level, but we'll see where it goes. Next level for me up at 79.90. There's got to be something in here. Might have to do some research for that Sunday video. And then looking at discretionaries, selling here again, closing below that shorter term support area. Continues to reject off of that 55 EMA. Selling seems like it's about to come through, but this is definitely rotation into safer stocks at this point. Staples going higher, discretionary selling off. And if you've been watching my videos for a while, you would know that utilities are absolutely skyrocketing, which again is another safer sector. Moving over to breadth, both of these were positive on the day. 20-day breadth still has a little bit of room here up to that 86.53 level. Probably going to see at least one more candle higher on that. And then looking at the 50-day, similarly, slightly bullish day. 62.25 is the next resistance. Might see that 55 EMA act as a little bit of resistance, but momentum and RSI on both of these still look slightly bullish. 1 or 2 more days of bullishness left in this move, in my opinion. Moving over to the dollar, we talked about this being a potential lower high. We went basically sideways on the candle, finished a slightly bullish 0.11 to the upside, momentum feebly trying to roll to the bull side. And you can see it here, low, slightly higher low. If it holds, if this breaks back above the trend line, holds that push and then pushes back above 155.50, I think that's going to be a pretty decent indicator that the dollar is set to go higher. So far it hasn't done it, but if it does a move like that, that could absolutely be bullish for the dollar and weak for equities. But as long as it's in this sideways choppy to potentially down market, equities should be in good shape. Moving over to yields, you can see the 2-year actually getting a pretty solid bounce, about 1% higher off of that 4.8 level. So pretty solid move there. Momentum rolling to bullish on both of these actually. So you can see slight consolidation here, 4 days in a row in the same price. Same thing here with a bit of a breakout there on the 2-year. So yields might be catching a bounce. I still think it's going to be a higher low if it continues a little bit higher. The 21 EMA sitting up there as resistance. That's at 4.92 on the 2-year. And 4.58 here on the 10-year, so that would overthrow this level and then potentially reject. If that happens, then we should see markets going higher. Moving over to bonds, we saw J&K selling off here today. Not great. You can see momentum on this selling off. That's a bit of a bearish indicator there. Seems to be forecasting a bit of a down move in equities that we haven't seen start really yet, but this is starting to sell here. So a bit of a leading indicator. We'll see how that plays. Still got the 21 as support down there at 93.60. And then TLT still hovering in the same zone. Momentum stepping to bearish. First time we've seen that in a while. And that could spell some lower levels here, at least in the short term. Moving over to volatility, you can see both of these continuing to sell. VIX getting all the way down to 12.5. That is pretty much the bottom that we've seen here recently. Typically you start to see some bounces from there. Not oversold yet, but that's pretty unusual to see on the VIX. You can see we don't typically get into that 30 area, but once we get into the 40s, 35 to 40, that is pretty concerning. Typically that's the bottom here. You can see it on this previous move. VIX got all the way down to 32.6, and right now we're at a 35.4. So again, 1 or 2 more days in my opinion, and then we'll start to see this roll up. See how it plays, but right now still in a bearish condition, which is bullish for equities. Moving over to my accounts, you can see I did fine on the day, made just a little bit of money, lost some in my IRA because the market was down about $1.50. It's hard to recover from all of that, but I did okay. And then I sold a 204 for the Monday session for 92 cents. That's making a little bit of money there. Really, I want these shares to go away. I'd like to get assigned on Monday. I think we're just about done. Maybe one more day a pop. Probably going to have to take these off early in the Monday session, especially if we start to sell aggressive. Similarly here on the Qs, up $1, made $1 for each of those. So $200 here. So that's fine. I did sell some puts for the Monday, 442, which is not super great. I still have a 444 call for the Tuesday session, and that has about $1.80 left on it. So looking to make some money there. Probably a little bit more aggressive than I wanted to be going into the weekend, but we'll see how it plays out on Monday. Maybe this can hold up one more day, but if it doesn't, I'm definitely going to be looking to get out of these positions quite quickly. And then these covered calls are still deep in the money at 437 for $6 credit, so being patient on those. Overall neutral. going into that Monday session. Let me know down in the comment section what you think of the Michigan data. Is the U.S. consumer finally starting to slow down? And how is that going to affect the economy and inflation? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.